Guys, welcome to my another video. In this video I'm going to discuss about internal environment. Right, in my first video I discussed about business environment, definition for internal environment and definition for external environment, and factors under internal environment and external environment. In this video I am going to discuss detailedly about internal environment. Right, so in your grade 10 syllabus, there are 3 parties who come under internal environment. Only 3 parties, right? Those parties are owners, managers and workers. Only 3 parties. Your grade 10 syllabus deals with only 3 internal parties. Those internal parties or those internal factors. Internal factors are owners, managers and workers. Right? So in this table I have put definition for those parties and factors, how those parties affect the business. Right? Owners. There are no any standard definition that asks you to define as it is. There are no any standard definition. Anyhow, your study text describes those parties as it is. Right? As it is. Your study text describes those parties as it is. In simple term, owner is the person who invests on the business. Who invests on the business. Owner is the person who invests on the business. Managers are the people who run the business. Simple term, right? Who run the business. Employees are the people who work for salary. Who work for salary. In simple term, you can define parties as it is. Owner is the person who invests on the business. Managers are the people who run the business. Employees are the people who work for salary. Or else, employees are the people who use their knowledge to do the business operations. Right? You can describe as it is in simple term. Right? There are no any standard definition to define owners, managers and employees. So factors. We'll see how owner can affect a business, how manager can affect a business, how employee can affect a business, financial capacity. So, financial capacity. If the owner is having adequate capital to invest, adequate money to invest, that will be the strength. Right? That will be the strength. If owners do not have adequate financial background, adequate financial capital, adequate money, that will be the weakness. Weakness. We know that internal environment. We know that internal environment can affect either positively or negatively. Right? Positively plus, negatively minus. Internal environment can affect the business either in good way or in bad way. If it is in good way, we will say strength. Right? If it is a bad way, it's a negatively. If internal environment affects the business negatively, we will say that as weakness. Right? So strength and weakness. So here having adequate financial capacity, adequate financial capital, adequate capital will be the strength. Not having adequate capital will be the weakness. Right? Owner has good business knowledge. Right? He knows how to run the business. you know how to deal with resources. So owner has good business knowledge. That will be the strength, right? Facing losses, chances of facing losses is very low when you have good knowledge, right? So if owners do not have adequate knowledge, that will be the weakness. Experience, having good experience will affect the business in a good way. So that is positive. Strength, not having adequate experience will affect the business in a bad way. So that is minus, negative impact. So that is weakness. Management style, owner knows how to deal with his employees, how to get work done from his employees. Owner knows that. So management style of the owner is very good. So at that time it will be the strength to the business. If owner do not know how to behave with employees, right? Owner is very rude to his employees. Owner don't know how to get work done from his employees. At that time it will be the weakness to the business. Right? Age, young. If owner is very young person, that will be the strength. So lifespan of the business is very high. Right? If owner is a very older guy, it will be the weakness, right? It depends. Anyhow, it depends, right? Social status. If owner has a good social status, good name in the society, if owner is a very reputed person, well-known person, that will be the strength. We all like to deal with well-reputed people, right? So if owner has good reputation in the society, that will be the strength. If owner has bad reputation, that will be the weakness. Right? Network. Network means knowing others. Right? If owner knows lots of people in the industry, that will be the strength. For example, the business is shoe manufacturing business. So in the industry, shoe manufacturing industry, if the owner knows lots of people in the shoe manufacturing industry, owner knows lots of suppliers, lots of wholesalers, lots of retailers. At that time, that will be the strength to the organization. Network. Owner has good network. That will be the strength to the organization. If owners do not have good network, that will be the weakness. Right? So managers is the person who run the business. Right? How manager can affect the business? Manager also can bring strength and weakness. If manager has good experience, that will be the strength. If manager do not have good experience, that will be the weakness. Likewise the owners, right? If manager has good business knowledge, strength. If manager do not have good business knowledge, that would be the weakness. Relationship with employees. Manager knows how to deal with employees, how to get work done from the employee. So manager is very friendly to the employee. At that time, that will be the strength. If not, that will be the weakness. Young employees, strength. Network. Manager knows lots of people in the industry. Manager knows lots of customers, lots of suppliers, lots of people in the industry. At that time, manager can bring new business opportunities. Manager can get new orders. So it will be the strength. Right? So in another way, if manager do not have good networking, it will be the weakness. So employees, the people who work for salary, right? So dedication towards work. If employees are diligent, if employees are working hard, it will be the strength. If not, it will be the weakness. Qualification. In accounting department, people are very well qualified with accountancy. At that time, it will be the strength. In HR department, people have adequate qualification in HR related matters. So it will be the strength. If not, accounting person do not have qualification. HR person do not have good qualification. That would be the weakness. They might don't know how to deal with accounting stuff and HR stuff. Right? Having good qualification is a strength. Work experience. Obviously, you know, having good work experience is a strength. Not having good work experience will be the weakness. Self-motivation. Same. Attitudes. How ultimately attitudes matters. Right? Attitudes matter ultimately. So how employees deals with other employees, how employees deals with management, how employees deals with customers and suppliers, that matters. Right? If employees' attitudes are good, that will be the strength. If employees' attitudes are bad, that will be the weakness. Loyalty. Having loyal employee is a strength. Not having loyal employee will be the weakness. If employees are very loyal to the business, very loyal to the owners, they try to minimize the wastages. If not, they don't worry about the business, right? They will only worry about the salary. If employees are not loyal, they won't worry about the business. So if employees are loyal, they consider more about the business. They will try to minimize the wastages, right? So these are the ways how it will bring strength and weakness. So in my next video, I'll discuss about external environment, right? In my next video, I'll discuss about external environment. If you like this video, please like, subscribe and comment. Thank you guys.